Hi everybody, I'm Steve McDonald and this is your Investors Daily Edge midweek market update. In focus this week, the EU and the buy-in opportunity it presents, avoiding treasuries, housing, oil, the Senate votes on IMF funding, and Buffett dumps a lot of Kraft stock. The EU and the crazy week we just had. The Euro's ride down should not be a surprise to anybody who's been watching this video for the past few months. We had a play on it that we rode from $1.50 to about $1.30, but this drop really shook the world because it came out after the bailout information was announced. But just as with our own bailout, as soon as the money hit the system, the market settled down a little bit and moved on to their next big worry, and that's yet to be announced. This is how the market works. It focuses all its energy on one specific problem, it runs its course, and then it moves on to the next problem. The euro could still go to about $1.10, according to the word on the street, about talks between Germany and the White House. But unless we see some really unexpected news, this particular issue should be running out of gas. The amazing part of this story is that as the euro drops, despite the fact that the member countries don't like to have to bail out some of their members, it is actually benefiting their GDP growth that had been lagging. That's good for them. As the currency drops in value, the EU will see better economic numbers, just as we did with a weak dollar last year and the first quarter of this year. The really good news, though, is that we have a great buying opportunity because of the severity of the market reaction, especially in oil. The whole market has taken a little whack, but oil has dropped 20% in 2 weeks, more than 20%. This despite the fact that OPEC has raised their world demand estimates 3 months in a row. The economic numbers for the U.S. are very good, and China's demand has not slowed a bit, and the rest of the world is moving ahead as well. Demand for oil is increasing, and supply is not. It's not hard. Do the math. Buy the oil right now, average down your cost, and ride it to around $95 this year. Don't let the frenzy scare you. Stick to fundamentals and keep your focus. The turnaround worldwide is happening, and there are lots of places to make money even on the bad news. Next up, treasuries. Treasury yields have dropped as investors have run to safety. Do not buy treasuries here. They are paying almost nothing, and it's a classic trap for the uninitiated. Buy here and you have an almost guaranteed loss. That's right. These treasuries are only guaranteed if you hold them to maturity. Avoid treasuries here. Housing. Housing starts are up, and so are the three builders I recommended to you in the last month or so. In fact, Beazer was up 10% at one point on Tuesday. Many of you wrote and questioned my sanity when I suggested you look at builders in this market. But it all goes back to the basic idea of buy when things look really bad. So with that in mind, think about oil again. There is a concern that this housing activity will dry up when the incentives for home buyers goes away. We're going to have to wait and see on that. There's really no way to predict what's going to happen. For now, sit on the gains from the home builders and keep your trailing stops in place. Next, the Senate and the IMF. The Senate voted 94-0 to not fund any IMF loans to countries that look like they can't pay them back. This is amazing. This almost sounds like common sense has sneaked into Congress. Could they be getting the message that the voters are fed up with their spending and taxing? Don't expect this newfound austerity to last any longer than the next election cycle. Americans have no memory when it comes to fiscal issues, but ask them a trivia question and they seem to have all the answers. Kraft and Buffett. Warren Buffett dumped a lot of Kraft stock recently. The feeling is that they paid too much or too high a price for Cadbury. But analysts disagree. Most feel Kraft has made the necessary move to get out of its no-growth mode. I'm going to stick with Buffett on this one. I think they probably paid too much for it. Finally, the reason most of you really watch this video, the Slap in the Face Award. This week, it's been such a busy week, we have two this week. One goes to a brokerage firm on the West Coast called Weissel. They illegally stuffed investments into 3 accounts of companies that they were being paid to manage money for. Stuffed, yes, I said stuffed. This means they sold investments they shouldn't have and did it for one reason, and I hope you're sitting down. They sold these investments illegally to pay bonuses. Yeah, they illegally loaded up these accounts, took the proceeds from the sales, and paid bonuses to their employees. Now that's what I call taking care of your own company. I wish I worked for somebody like that. The next one goes to Bank of America and Countrywide, the old mortgage company. They get the big slap in the face award this week. MBIA, who insured many of these mortgages to both of these companies, and these mortgages defaulted, is reviewing the documentation for these mortgages to see if any of the guidelines for lending were violated. If they were, MBIA may be able to get out from under the responsibility to pay. I know you'll be shocked. I know I was when I found out that 85% of all the second mortgages issued by Bank of America and 91% of Countrywides had no income documentation. None. It seems they didn't feel it was necessary to make sure these people could pay back the loans. This sounds like a training academy for Congress. That's about it. We'll see you all Friday with a great segment on gold. Rusty McDougall, our resident gold bug, will be with us to talk about $5,000 gold sooner than you think. We'll see you then.